Welcome back. Yesterday was a tough session for our markets. The benchmark indices ended with a cut of about 1.33 of a percentage point, below 24,350 on the Nifty. And this morning, the GIFT Nifty is suggesting that we could start with slight cuts, 62 points lower now. But let's talk about the stocks that you should have on your radar this Wednesday morning. Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. Nigel, you go first.
Well, that's right. Ambuja Cements, they have gone ahead and they have announced the merger of their subsidiaries with itself, and that includes Sankey Industries as well as Penna, which they have bought in the recent past. The reason is they're streamlining operations. They're looking at simplifying the entire compliance requirements as well. So this was expected to happen at some point of time, and that's taken place. They're saying that the transaction should get the green signal from most regulators and go through within the next 1 year or so. Now, post-merger, there'll be a small skimming off in terms of the promoter stake in Ambuja because there will be some dilution. The ratio is always most important in these cases. So, if you have 100 shares of Sankey Industries, you'll get closer around 12 shares of Ambuja Cements. What's the read-through? Simplifying group structure is normally positive. So, there will be positive for Ambuja Cements, both because they're simplifying it. And it'll be negative actually for Sankey Industries because the ratio is in favor of Ambuja, but it's actually not in favor of the Sankey Industries shareholders at all. And that's to the tune of close to 11% in comparison to its last closing price. So negative on Sankey, positive for Ambuja, and also keep an eye out on ACC because that's the other subsidiary that they have in there. Will they be looking to go ahead and merge that entity as well? Probably that could happen. But the problem is, will it again be in favor of Ambuja Cement? So if that's the case, ACC will be the stock that could be under some pressure as well. Well, let's talk about JSW Energy and AP Real Estate as well. Vivek joins us to help us out with the news on both those two. Vivek?
Well, good morning. That's right. So JSW Energy is in focus. A news report Reuters has mentioned, quoting sources, that South Korea's LG Energy Solutions is in talk with the company to manufacture batteries for electric vehicles, as well as to set up a 10 gigawatt battery plant in India. This is expected to be a 50-50 joint venture between both LG as well as JSW Energy. LG will be contributing the technology as well as equipment for making batteries, while JSW Energy will be investing the money in the JV, investment pegged at over $1.5 billion. We reached out to the JSW Energy Group. At this point of time, they did not offer any comment. The second stock on the radar, Aditya Birla Real Estate, erstwhile Century Textile. Good development over there. The company has acquired a land parcel covering over 70 acres. This is in Boisar in Maharashtra, and the price of this particular parcel is over 104 crore.
Okay, all right, Vivek, thank you very much for that. We'll keep an eye out on those stocks. Edelweiss Financial stock was up 8% yesterday, back to about 140 levels. Abhishek, tell us more.
Well, RBI has removed supervisory restriction that they had placed on ECL Finance and Edelweiss, ARC with immediate effect. Just to alert the viewers, RBI on 29th of May 2024 had imposed business restrictions on ECL Finance as well as Edelweiss ARC. RBI had directed ECL Finance to cease and desist from undertaking any structured transaction with respect to the wholesale exposure, and they had also directed Edelweiss ARC to cease and desist from any acquisition of financial assets in their ARC business. Other alerts to our viewers would be that Edelweiss Alternate Asset Subsidiary had filed a DRHP for an OFS of rupees 1,500 crore a few months ago. The rating agency had mentioned that there is material supervisory concerns due to RBI restrictions. So with these restrictions being lifted, there could be a rating action change from the rating agencies as well. Back to you.
Thank you very much for that. Vinny is now joining in for some more stocks that are in the news. Vinny.
Good morning. So first, let's start with Aurobindo Pharma. It's Unit 5, which is in Telangana, an API facility. There was an inspection that was carried out for that one. Now, they've received 2 observations, but this is mainly procedural in nature. So yes, we could see a bit of a negative start, but then it could move on to the neutral territory is what we're watching out for in terms of Aurobindo Pharma. Yatharth Hospital, that's the next one that we're keeping an eye out on. We're expecting pressure coming in on the stock today after the Income Tax Department's Assistant Commissioner has attached some equity shares, unquoted equity shares, as well as some property for the company, and it's couple of its subsidiary is what they've highlighted. So because of that, we could see pressure coming in on Yatharth Hospital. Also, they have restricted from transferring or parting with any of these assets from the date of the order. Moving on, we have RITES that's in focus. They've won an order for around 122 crores, and this is from the Meerut Development Authority for a period of 5 years. This is for consultation services as well as preparation of detailed project report for the Meerut Development Authority. Lastly, other than that, we have Restaurant Brands Asia, that's also in focus. The board will be meeting on 20th of December to consider fundraising plan. So on the back of that, we're expecting green for the company.
Okay, all right. Thanks a lot for that, Vinny. Well, let's go back to Vivek. Vivek, that's a negative development come in on Vatek Wabag. Run us through details on that front.
That's right. It's a concerning development as far as Vatek Wabag is concerned. Remember, in September 2024, the company had said that they had received a 27 crore mega order that they classify. This was received from the Saudi Water Authority in the Kingdom of Saudi Arabia. This was a 300 million liters per day mega seawater desalination plant order that the company had received. And given the particular size of the order, it was a significant development as far as Vatek is concerned. However, in a development yesterday, the company has informed the exchanges that this particular order has been cancelled. The company has given the reason that it is mainly due to administrative reasons from the Kingdom of Saudi Arabia, from the SWA. Now, what does it mean as far as the order book is concerned? Remember, the company's order book at the end of Q2 was 14,600 crore, which now drops down to 11,900 crore. And the guidance that the management had given as far as the order book was concerned was that at the end of FY25, they would be in the range of 16,000 to 17,000 crore. So whether they can meet that with other orders is something that we need to watch out for. Also, the reasons at this point of time, the company is trying to ascertain, expect a negative reaction on the stock today.
And this is a stock which is up 200% since the beginning of the year, and there is negative news flow, cancellation of a large 2,700 crore order. One more stock you should watch today perhaps is Tilak Nagar Industries, because as Money Control is reporting from sources, they've entered into the final race to acquire Pernod Ricard's Imperial Blue whiskey brand. So that's another stock we'll track. Here's a recap then of the stocks. Stocks with positive news flow are Ambuja Cements, JSW Energy, Aditya Birla Real Estate, erstwhile Century Textile, Edelweiss Financial, RITES, Restaurants Brands Asia, the owner of Burger King. Stocks with negative news flow are Sanghi Industries, Vatek Wabag, Aurobindo Pharma and Yatharth Hospital. Okay, not done with news flow. Sudarshan is now joining in with the latest on the December Vahan data. Sudarshan.
So we have tried analyzing the Vahan data for the first 2 weeks of December, and it has thrown a different picture than what we have been hearing till now. So till now, we are hearing that two-wheeler segment has been doing relatively better than other segments. But as per Vahan data for the first half of December, the one segment which has underperformed other segments is two-wheeler. If you look at the registration data in the first 2 weeks of December, overall registration has fallen 19%, while registration for two-wheelers has fallen 25%, and it's been the worst amongst all these segments. For the December 1 to 17, total registration was 9.78 lakhs in comparison to 12.10 lakh that we saw in December 1 to 17, 2023. Now, as per the fuel category, the segment which has done better is electric segment, where I've seen registration increasing by almost 7%, while petrol registration for petrol vehicles has fallen 25%. Even UBS has come out with a note indicating the same trend that we have been highlighting. It says December industry retails are on track to post decline, and that would be led by Hero Motors and Bajaj Auto, while TVS and Honda are likely to gain both year-on-year and MOM, and Hero Moto is expected to lose the most, and it expects industry to post 7 to 9% year-on-year decline in retails in the month of December, with Hero Moto Corp and Bajaj Auto are expected to record 15% decline in the retail, with TVS Motor and Asha Motors are on track to post growth for December, and while electric vehicles are continuing to gain the traction amongst all the segments.
Neat data. Thanks a lot for that, Sudarshan. Well, let's move away from the equity markets for a bit and let's focus on commodities. Manisha joins us as always to tell us what's transpiring out there. Manisha, morning.
Morning, Nigel. And I'm looking at the energy as a sector right now, where the crude oil prices have declined a percentage point overnight and trading at a one-week close. Well, there are prospects of more U.S. sanctions coming in for Russia oil supplies. The markets also are looking at weak economic data overnight from China and Germany. And then there are fears of supply glut in 2025. But the U.S. Fed announcement really takes center stage today, and all markets would react to that. The markets also will watch out for the U.S. oil inventory data that comes in today. But the surprise run-up within the energy sector comes in for natural gas prices, where we saw 4% of gains overnight. There is a forecast of harsher winter, stronger demand in the next week. There is also a rise in LNG exports from U.S., and that clearly seems to be supporting the prices there. Within the energy space, the only gainer has been the natural gas till time.
Thank you, Manisha, for that. We will slip into a very short break. On the other side, we'll connect with Deven Choksi for some fundamental stock talk.